Hello. Jenny Bowling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments. And today we have George, I should have verified, Salas or Salas? Or
Salas.
Salas.
George Salas. Yes, ma'am.
Think of Dallas, but you're Houston. Right? Anyway, yes, thank you for coming on the show today. And I would like you to go ahead and tell us about your storied past.
Absolutely. So, well, first of all, thank you for inviting me here. I know we've been meaning to connect, Jenny. So I'm honored to be here in your podcast, and I hope I bring some value to your audience. Okay, so my name is George Salas. I like to say I'm a real estate investment strategist. Because I focus on, a couple areas in real estate, and I've done it all, right? So, but specifically short-term rentals, right? To go back to where I came from, really, I am from Peru. I moved here to the U.S. in 2000, okay? And when I was 6 years old, my parents actually were getting a divorce. I'm going to walk you through like really speedy all the way through like back then, right? How I actually came to where I am today, and then how we're connecting. So I was 6 years old, parents getting a divorce, and boom, we go and move to this small town. Okay, Jeannie, and my mom takes us, me and my brother with her, and we moved to this little town where we're moving into my grandma's house in an adobe house, and we were so poor that at some point when we were there, like half of the house had collapsed because adobe, as you know, melts with water. So one of the tiles slipped up, and in a couple of weeks, the entire half of the house had collapsed. So we had to move to one bedroom on the other side, and there was no living area, right? We didn't have a living room. So
is it safe to stay in there?
Well, not really, but so it was like you block out that half. When you're poor, you don't have a choice and you have no idea what to do. You just kind of play with it and block out one side. So we literally had to block out one side. It was just one room, right? The houses are divided in different rooms. It's not like here in the US where you have one big, right? Over there is just different rooms, and it's not an open format type of homes. A little bit different, right? So we moved to that other side, and we were really poor, Jenny. We moved here. Fast forward 9 years later. That was whenever I was 6 or 7, right? Fast forward 9 years later. 9 years later, I am moving to the U.S. from Peru. My mom is, she wanted the best for us, and boom, we move here. I'm in the U.S. I don't speak any English, and then I'm just trying to figure out, like, okay, well, this is a big change for me, right? And I started in the hospitality industry at that time. I started as a bartender, server, and moved on to going into the nightlife, right? So for 10 years, I worked in the hospitality / service industry, creating amazing experiences for people as an event producer and promoter. And I worked with, for about 60, 70 different venues with different venue owners, right? And that was my life until one day I was approached by one of those venue owners to invest in his deal. He was building an event space / nightclub, right, on a famous Washington Avenue in Houston. And he reached out to me. He said, I've got this deal. I've got a lease. He knew I had some cash that I had saved over several years from our business, right? And he became my best friend, right? So, and quote unquote, my best friend, because he just faked it all up, right? And essentially, a few months later, I found myself investing as a limited partner into his deal, right? I didn't know it was a limited partner. I thought I was a partner on the deal, like a general partner, and I would make the decisions, but I didn't understand the structure back in 2015, right? Or 2016. So I was just going along with it. I wanted to be a business owner. I wanted to just grow, right? And I wanted to be at the top of my game. And that was the top of my game that I always wanted, right? While I was in that industry. So I did. And over the course of a year and a half, I ended up investing $400,000 to help finish launching this thing, this venue.
That is astounding. You even had that much coming from broke.
Yes. I honestly, it working in the nightlife, when you work, a lot of it is cash. It comes in big chunks, and that's all you do, right? That industry sucks you in, right? And that's all I had time to do. I was slave to what I did, right? Compared to how I live life now. So much different. Did So anyway, I'll keep going. Then I invested in, we opened up the venue, right? It was, we were $1.3 million in debt. And a year and a half later, they locked us out. Okay. The general partner had not renegotiated the contract after being behind in rent. So he didn't get the paperwork straight. So when we launched, he wanted to get paid for the back rent, and he never got anything signed on paper. So, man, we lost everything. And then I had to make a choice, Jenny. I had to either say, it's over, or I'm going to get up harder than I fell. Okay. Without the skills, knowledge, or anything to do with real estate, I said, I'm going to do real estate. So I went, and there was a breaking point, right? I received a phone call, right? My friend, who is now, he's got an oil fund, his name is Brent, out of Houston here, called me one day. He says, George, I need you to come to my flip. Come to my flip. And I did. I went over there, and for 3 hours, I listened to motivational, you got to get your ass and get to work. You can do this. That's when I came out, and I said, I'm going to do this, right? The next morning, I woke up at my apartment, and I said, I'm going to do this, right? So that was the breaking point for me when I made a decision to go into real estate. And then from there, there's so many more 10x jumps, but I'm just kind of like making them all really short for you, right?
Yeah. No, that's good.
So this is what I did. I went to seminars. I took courses. I bought Audible books. I listened. I went and met people. I delivered value. I made connections. I went to networking events. And that's how I learned real estate. And 4 months later, I closed my first deal. At the end of 2018, which was my first year of real estate, I'd already done over 25 deals. And I had 10 short-term rentals in the form of rental arbitrage. I have rented 10 deals to sublease them out. So that's 35. And I had done a bunch of wholesale deals. I had done a bunch of renovations, rehabs. And I was like full force into it. Okay. By 2020, Ginny, right? By the pandemic, I had 40 doors. Okay. 40 doors. I was going at hyper speed. So now, guess what happened at the beginning of 2020? COVID, right? COVID showed me that I was really not as strong as I thought. I thought I was God, honestly. So I got another slap in the face 3 years after my last slap, right? Boom, a knockout. So I am on the floor again, and I have 40 doors. Majority of those doors are rental arbitrage, which means renting the property to sublease it, right? And I'm here with very little business, and I now had to figure out what I needed to do. And that's when I realized that I needed to change my business, and my strategy needed to go from doing basic, regular, short-term rentals to higher end, right? Better, package them better, and just step up my game in general. And today, we don't have 55 doors like we reached at one point. We have a lot less than that, 1/3 of that, right? But we are more profitable. We make more than when I had that many doors that were smaller. Okay. That was a big epiphany. And so fast forward to 2021, right? I started sharing my experiences. I started taking some coaching clients in 2022. Really the biggest growth in my entire life has been between 21 and 23, right? Where I've really stepped it up to the next level by deciding to take my 4 years of experience at that time, 5.5 to 6 now, and start creating something that would bring in a more sustainable future, right? Instead of doing transactional, doing flips, wholesale deals, or instead of just having a business where I was running, right, which is being an operator for a short-term rental business, I wanted to create something bigger than that. And I went and for the last 9 months, we've been working on a private equity fund, right? We are in the same mastermind, as you already know. So that's the journey. And where I am right now, we just launched it. And I'm so glad and happy to be here. And I am just excited about everything happening in our lives right now.
That's terrific. So let me back up a bit. On your short-term rentals, talk about where they are.
Absolutely. So most of our short-term rentals are in Houston. Okay. We have some in surrounding cities, right, around Houston. And then our fund is investing in 4 additional markets. Right now, we haven't opened those markets yet. We are working on it, right? But we will be in 3 to 4 Texas markets, including Houston, and then 1 outside of Texas market. Okay. So we're targeting places outside of San Antonio, and then San Marcos, Seguin, New Braunfels area. That's one of our target. It's a triple market. You have 3 different cities within 20, 30 minutes of each other, which have a very high amount of tourists coming in every single summer, right? So we're targeting that area and a few other areas in Texas as well.
I see. Okay. And the one outside the state, is that Florida, or can you tell me?
You guessed it right. Florida. There's a lot of markets we're looking at in Florida right now. Even though it's a little saturated, there's still some niche markets.
There are.
Absolutely.
Yeah. Mm-hmm. Yeah. Well, and if I'm hearing you right, you're primarily gearing towards the emerging, not where there's saturation already. You've been following that kind of a mode, right?
Well, when it comes to our market research, right, and choosing a market, we're choosing markets based on a thesis. Okay. If you allow me, I'll break it down for you.
Sure. Yeah, please.
Right. When we choose a thesis, or when we utilize our thesis, the thesis we've created is essentially it's a market research where we've done the research in 2 different sectors. So we've taken actual Bureau of Economics and Home Price Index data from the 2007 to 12 in the real estate sector. So we've looked at the prices, and what we're going for is we've found that there are linear markets which have grown in a linear mode, right, instead of exponential. And they have had a relative change, which is the thesis, instead of an exponential change. So we're taking markets that have had a steady growth historically in real estate. We're taking the same data and looking at the 2007 to 12 from hospitality data. We are taking both of those top 100 markets, merging them into one, choosing the best markets out of there, and comparing that data to what our short-term vacation rental data from today is. That's how we're doing our property selection. Okay, that's what we call our relative change thesis. So it's in-depth research. I hope that was clear and
yeah, that's cool. That's very cool. It's similar. I'm attracted to senior driven assets. So senior housing, medical office, that's going to proliferate with all us baby boomers needing doctors all the time. Right. So I'm trying to connect with in the background here the urgy centers and the medical office growth, and I appreciate very much your data driven approach there, because I like data a lot. But one of the things that I have also considered like a way to double check that is to take a market leader, for instance, a Brookdale Communities or some of these larger ones, or the hospitals, and connect with the people building the new, and building the new facilities, and trying to follow their demographics and research. So it's kind of a double check kind of thing. But yeah, no, that's really interesting. So changing the subject though, do you have something of a brand on your homes that you're doing? Is there something that you have in each one, or something you do for all of them that makes it your product?
Oh, absolutely. We target highly and create, not just target, sometimes you can't find those types. We target and create highly amenitized homes, right, Jeannie? And the reason for that, it's because just like you said about, looking at somebody that has already created a great product and really just mirroring what they're doing, creating your own style of it, right? So we're doing the same thing. We're taking this best markets, finding the best product, aka the best properties there, right? And then we're going for making them better, right? We're getting our own and creating our own mojo, our own style, right? So we come in and highly amenitize a home. Our brand is called Empress, but that's essentially not just what we do in each house. We don't put an Empress logo on all of them. We do, but not in every single area, right? What makes our properties unique is the highly amenitized and fully loaded. That's one factor. Now, how does that separate us from the competition? How does that help, George, right? You could ask me. Well, 95% of properties out there are not unique. So what are we doing when we launch a property on Airbnb, or when we create our own product, our own website? We're literally becoming a commodity because we're having a race against the bottom. That was my big aha moment when the pandemic hit, right? And then afterwards, right, we didn't have unique properties. We didn't have unique selling propositions for our product, right? Which is extremely important. If your audience has not read the best marketing book ever, right? It's called $100 Million Offers. $100 Million Offers by Alex Hormozi, right? I don't know if you have, but it is.
I just bought it after our conversation yesterday.
Yeah, I love it. I love it. Yes. So that book resembles, and it gives you the idea of, if you create a great product with real great thinking behind it, you're delivering that product, which is a highly amenitized homes, different with the branded walls, right? Each room has a wall. You have beautiful designs on the living areas, and then you create different colors for each house, right? Then what you're doing is you're making yourself completely different from the competition. That book teaches us that. Since then, I've implemented a lot of what that book is, and it's not even about creating short-term rentals. It has nothing to do with real estate, but it's a concept that applies to every single business, right? Every single business.
I did not realize that. So I'm on the same track as the book, I guess. So that's good.
I love it. Yes, you are. Absolutely.
So I looked at that. You had a post on the six-figure process where you're showing a home that's almost ready to put on, I guess, Airbnb. And you do unique design, between the bamboo and this and that, and the wall, like in that home, is that, do you do a wall like that in every home that's almost like your background, I guess, right?
So every house that we have been doing in the last 2 years has its own brand, right? So other than Empress, the umbrella brand, Empress Vacation Rentals, aka Empress Capital, right, our fund management company, we have, for example, we just launched our Texas Paradise property, right? We have our trendy farmhouse. The one that you're referring to is the Bamboo Lagoon, right? Every single house has its own identity.
Gotcha.
And it has its own colors and its own brand. And that's what makes that property different than everybody else. Now, some of the amenities are going to be the same, like a pool or a hot tub. But when you create something that even separates themselves from the pool houses, then you're in in your own niche, right? You don't have competition. You might have similar items, similar competitors, but they're not in the same category as you are, right? So to answer your question, Ginny, yes, we create a brand for each house.
Yeah. And it looks like the second you come in the door, there's an impact. Is that true of all your properties?
Well, the last ones, not the ones I created many years ago. Everything we've done since 2021, which is, I'm going to give this credit to my beautiful wife, who is the creative visionary of the design side of our business, right? She launches designs them all, gets a creative vision, and puts together all that. And I pitch in a little, but I can't take that credit away from her. So, it gives it that look. It gives it the desirability, right? When people look, they want to look at something beautiful and feel like they're actually there.
Yeah.
Right?
Yeah. That's good.
That's what makes a book.
All right. So let's talk about you getting a fund started. You've come from this poor background. Mm-hmm. You've built a lot, worked your tail off, obviously, and invested in this huge event center that then failed and you lost $400,000. And then you've turned around, picked yourself back up, and you've gone through COVID now, which I don't know what truly happened there as far as financially, but I know a lot of people weren't paying rent. The landlords that helped people find the government money obviously fared better because apartment values went chink for those. But those that didn't hurt, but arbitrage is a risky thing when you're leasing and then subleasing. But so tell me what brought you to doing a fund now, and we're going to skip to that because I don't think my audience understands much about what it is and how they could participate.
Absolutely. So first of all, I wanna give you a quick sort of a breakdown of how could you go from George has absolutely not $1,000 to his name to having a $10 million private equity fund, right? It's the number one thing, the number one driver behind that. There's something inside each person that's different, and that's their drive for growth. My drive for growth, Ginny, is bigger than anyone else's I've ever met. I am extremely ambitious, but I did it wrong so many times. Okay. When I went and wanted to be a business owner when I wanted to invest. Wrong. I didn't know about structuring. I didn't know how to vet a partner. I didn't know I was an LP and I thought I was a partner in the deal, right? I didn't know. I didn't have the skills, the knowledge, right? I had the guts to do it, but that's always been there. And if that never goes away, you can fail. And one, you're going to hit. Now, we've hit it on several occasions, but I've also failed more. And the biggest thing about that is, for me, you have to learn how to appreciate the gain of each failure instead of the gap and the negative, how much you've lost, right? Great book, The Gap and the Gain.
It is.
Right? Talks exactly about that. So that's what I've done. First, I fell. I lost $400,000. Then I go into real estate. My first year, I make $300,000 in gross. I live on $20K and I reinvest the rest. 2019, I make more than that. I reinvest and I reinvest. Now I get hit again during COVID with 40 doors, and 35 of them were within a 2-mile radius, Ginny, and business disappeared for 4 to 6 weeks. That's what hurt. Then I realized my strategy is wrong. Improve, try more. That's between 2020 and today, where you and I are. I've spent over $150,000 in coaching, masterminds, growth, conferences, courses, and in books. I have over 400 books. I've read over 150 of them. Listen, not read, right? So growth is that driver, right? But it starts right here.
Yeah.
That fire.
Yep.
Right.
Yeah.
So that's how I came around all my failures, which I have had several, into being able to hone in and hone down into creating something like a fund. I went in to Raise Masters, where you and I met, a mastermind. I've been there for 2 years. I study in depth how to create portfolios. I'm an operator, right? I study in depth how to create a fund, right? I'm part of a fund mastermind as well, fund creation. And I went just all in over the last 12 months to understand how to create it. Now, 70% of a fund, it's essentially your operations, right? I'm an operator, and I built a team of operators where we're going to acquire the properties. We're going to also manage the properties, stage them, list them on Airbnb, have our own platforms, market them, and manage them all in-house. Okay. Now, what I needed to learn was, okay, how do I go and raise $10 million? Right? Right now, we are a 4 out of the 10. And we are literally just launching this week in soft commitments, right? So 4 million in soft commitments. And essentially, that was the part I needed to learn. How do I structure a fund? How do I create a vehicle, right? And a fund simply is a pool of money, right, via an entity structure where accredited or non-accredited, depending on which one you do, investors can come and invest into that pool of money. And now there is a group within that pool of money, right, which is the general partner, which is the group that is managing, that goes and invests money from that pool into different asset classes, right? So in our case, we're building a short-term, median luxury vacation rental fund. So short-term rentals, we're choosing medium-priced properties, and we're going to convert them into luxury. That's all.
So are you also doing the midterm rentals, not just short-term?
Absolutely. We're adding midterm.
Yep.
But we're not so much marketing. That is an automatic. When you create something short term, people want to rent it midterm, but also we're going to market it in the platforms, right? We've built a lot of relationships with the actual national agencies. So we get into their databases, right? There are several agencies that do like stuff like relocation that work with different insurance companies.
Right.
And just like Airbnb, you have a platform. Just like Airbnb, you have a platform like, for example, Furnish Finder that markets to midterm, right? But you also have service providers that have like a pool of insurance companies. Right. Where the service provider manages the client for them and basically reaches out and deals with the operator, right? So it's not like Airbnb. They're more on the service provider. So we're doing midterm rentals 100%.
Gotcha. That's great. That's great. And now there was a point where your voice fell off a little bit, but I think it's real important to back up to it, because what you were talking about at that moment was that you're just launching. And so far, I think you said you have 4 million in soft commitments. Is that what you said?
Yes, ma'am. We have 4 million in soft commitments.
So explain what soft commitments are. Yeah.
Right. So soft commitment is very simple, right? Someone commits to raise money or bring money for you, right, to your investment, to your fund or syndication or whatnot. They simply sign a non-binding form in a way to soft commit their funds. Now, whenever you're ready, you call that money due, and that's whenever they're in the fund or in the syndication, and that's when essentially that hard commitment comes in, right? So for us, right, we have gone and raised the money because our fund is ready to go, right? And then we've recently, over the last month alone, we've raised to 4 million, right? Some of the money from the 4 million is from a fund manager. So we've partnered with people that have their own special purpose mini junior fund to raise with us, right? So we're targeting a lot of those partnerships, which, it's a fantastic strategy for those who don't know.
It is. I really like it too. I think I will end up doing that at some point, but I think it's great to have you explain it, especially being at this early stage of adoption. Now, when you said it's ready, that means that you're done with doing all the legal structuring and the paperwork is finally where you want it. and can launch, right? Is that pretty much what you mean?
Yeah, absolutely.
Yeah.
Our
Okay.
paperwork has been ready for a few weeks.
Uh-huh.
So that's the
And that's a
private placement
process.
memorandum. Yeah. Oh my goodness. It's 3-4 month process sometimes,
Is
right?
that how? Yeah,
Oh
yeah,
yeah.
okay. And
So
what's the cost on putting that together? Typically, a syndication is what, around 15,000. You figure, to put together a PPM and to do the legwork on that. Is a fund similar?
yeah, well, we've been very blessed to be around 25,000 without the marketing like website. So I would say altogether we're about 35,000 out of pocket before launching, right?
Yeah.
So and that includes the offering memorandum deck, right, which is a 50, 60 slide deck, right? The pitch deck creation, that includes the marketing material, right? And the pro forma, which is the basically the financial model, right? So you have to get different components. So it could get really confusing when you're building this out, because you have to go learn one, hire people to do one, and they're not communicating with each other, but they need the information from your attorney or from this. And it took us a while. I mean, imagine we spent 8 months plus just structuring this fund. We finished up, but the 4 or 5 months before that was 40 to 50 hours a week of just coaching calls, sessions, learning, watching courses, and being in our Race Masters community, learning how to build one, or watching my fund creation course, right? Or attending the conferences about funds. That was my life for 4 or 5 months, right? And it's quite a bit of work.
I believe
You have
it.
to
I
have
commend you for getting different sources too. I think that's real important to, get input from many different places, because everybody's experiences is kind of you can only get so much of it that you can convey, and everybody gets it a little different. So the more people you take input from, the better perspective you'll end up with. So
yeah, 100%. And I'm just so blessed to have our community, right? The community we're in.
Yeah,
We have so much
awesome.
support.
Yeah.
We have so much support every day of the week. We can go get the support. I love it. And then connecting with people like you, Jenny, right? Like amazing, right? Having connections. I built my entire fund has been built with the relationships from our community. Every single piece.
Wow. That says a lot. And so where do you see yourself in 3 years, 5 years? Where are you trying to go?
I love that question. 100%. Okay, so thank you for asking that. I appreciate people that really look towards the future, right? Whether you're like wondering, like, hey, where could you go? Where do you see yourself? Or just from an insight, like I meditate every single day, and in my meditation, it's a vision meditation called the 6-phase meditation. There's a section there, one of the phases, right, every single morning, that gives me a 3 to 5 minute part where I see my vision. Okay. And it's very clear right now. Right.
Well,
so,
do you mind sharing it?
Yeah, absolutely.
Okay.
Okay. My wife and I have 100 plus vacation rentals in our personal portfolio, not even the fund, right? Where we travel to on the weekends. Okay. We go hang out, we take our son there, and we get to stay there, whether it's on a Sunday and Monday, and maybe we stay the week, but we get to work from there. Okay. They're in different locations across the United States. And what they bring me easily 200,000, which is another part of my goal, right? 200,000 in net passive cash flow after everything, right? My wife and I live in our waterfront dream home, right? And we have 2 funds, okay? One is 10 million, one is 35 million, and we've raised $45 million in 3 years, okay? So that has allowed us to build the lifestyle, the life increase wealth, right? Long-term generational wealth for our family. So that's what I see every day. And it's all in the realm of creating an impact. I'm a 2-time New York Times best-selling author. Actually, I write down 5 times, right? And to achieve that, I've made a connection with Robert Allen, and I've been planning on reconnecting with him. You know who Robert Allen is? Of course, right?
Yes.
Yes.
I can't remember which book though. Which is it?
Well, all of them, like One
Oh,
Minute
yeah. Is it?
Millionaire,
Yeah.
like multiple streams of income. I love them all, right?
Yeah. Yeah.
So I met Robert Allen at a conference 3 times,
Oh my.
right? I have his personal phone number, and he teaches people how to become best-selling authors. So
Oh,
by that time, I'm already a New York Times best-selling author. And did you know that becoming a New York Times best-selling author, you can't buy those best-selling, right? Like you could do with the Wall Street, with Amazon. You can't buy them. Your book has to be amazing for you to become a New York Times best-selling author.
and you said
That
you have to?
well,
Oh,
I
you
see
will.
myself
You will. Okay.
5 times New York Times bestselling
5 times. Okay.
and
It
that's
will
part of the
be.
mission, right? I
Yep.
share my knowledge. I've helped 1 million people from stage, right? And not from stage. I've helped 1 million people achieve financial freedom just through my strategies, our investors, our clients, so I'm speaking like I'm actually living that life already. Can you tell?
I can. And I was thinking you've read that book I've read, Be Your Future Self Now.
Be your future self now. Yeah, I haven't read it, but
It's a good one.
I'm on a spree with Ben Hardy right now. I
Yep.
love his content,
Yep.
amazing. So that's a book. I was looking at it this morning. So
Yeah.
I'll
Okay.
read
Be
it.
Your Future Self Now should be on your list too. Yeah.
I will buy it yesterday.
Yeah. Well, so that's all very exciting stuff. And so, as I told you, as we're wrapping it up here, I would be asking you, what is your most pivotal person or event, something that happened to you that's been pivotal to your life?
Can I tell you more than one?
Yes.
Okay. I said two earlier, but I'm gonna just summarize three. One was when I walked in to that room where my buddy Brent said, George, come to my flip. And then we spent 3 hours there with a group of people, and he showed us his flip. Mindset change, huge breakthrough. First was internally, then externally. I'm going to go do this. Number one,
Okay.
right? Number two was when I met my wife, right? So, and then I'm telling him in sequential order, right? So that was happened first, right? Number two is when I met my wife. She came to help me during COVID and partner with me. I was struggling because we had so many properties with a 2 mile radius, and essentially business had just completely disappeared, right? So our business was struggling and I needed help. So she came to help me, and she's changed my life in a way that her support has been just exponential for our growth together. And number three was when I was sitting in Tampa at the family mastermind, which is a real estate mastermind, not the same mastermind as you and I. And I spent 2.5 days there, not just learning, but asking everybody, all the high level guys that were there, people that I usually surround myself with, people that have been doing bigger things than I have, right? Bigger mindset. And that's how I kind of get pulled up with them, right? I sat the whole 2.5 days and I asked to every single one of them that I could, right? There's 300 people there, but it's like boom, 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 boom. Speakers and everybody there is high level. They're all familiar with each other. Should I go and raise? I'm going to scale my portfolio. Should I go and raise capital privately, or should I start a fund? 95% of them, 9 out of 10 said, go start a fund, George. You got this, including Robert Allen. That was the most pivotal moment, number three, where I made a decision to go and 10x my jump. And a year later, we're here. We have one.
How about that?
Right?
Interesting. Yeah. Yes. Okay. Well, and it just gets more exciting, when you have money, like Catherine Bell says, you have oxygen, and there's more you can do. There's more you can do for other people too. And that's a big part of what we're all about here at Pivotal Real Estate too. We want to help people see what real estate can really do for them. I spent most of my life buying real estate for government, and hadn't thought about really buying for the family much. We did some here and there, but real estate really today, the way you can do it, especially syndications, is a different ballgame than most people realize, because my peers don't even realize, decades in real estate. And we didn't understand what syndications were or appreciate what they can do for you. So like Hunter says, it's Race Masters. We think everybody knows about it because we're so entrenched in it, but a lot of people have no idea.
Right. It's a fantastic way to invest without having to do all the work, right?
Yes.
With passively and not everybody can put a syndication together. So you're not investing with just anyone or a fund. You're investing with the best operators in that industry.
Or you should be. You should be. You need to look for them because there are some bad operators. But
yes, I totally agree with that. Yeah. Right. But if they can put together a fund and it has a good track record, at least their operators track record, they have a good team, right? Yeah. Then that's better than investing with Michael next door who says he does real estate or has done 5 deals, right? And you're investing in a portfolio of properties or a large concept in a syndication, and it's more of a proven track record when you have built something like that, right? So
yeah. Now your fund, correct me if I'm wrong, some funds I think are for one property, but others can be for multiple. Is that right?
Yes, ma'am. Ours is for a minimum of 25 properties. So we're going to be investing in 25 to about 40. We underwrote 40, right? But we're saying minimum 20, 25. So it's multiple. Yeah.
So one of the things you're dealing with or going to be is that there's some people that want to know the property that their money's going towards. But the best thing about not doing that is by investing in your fund, they're diversified across multiple properties, which lowers risk even more anyway. So it's interesting. Yep. That's one reason I expect to be getting to doing the fund model at some point, but I'm still educating a lot of people, and I guess that's a nonstop thing really, but a lot of my peers still are new to it, so I'm back at that point right now. But anyway, thank you so much, and please let everybody know, put in the show notes how to reach you.
Absolutely. And thank you for having me here, Jenny. I appreciate you. You're doing great things. You're going to continue to do great things and making an impact. And I appreciate you for that. So if somebody out there wants to connect, you can simply go to my personal website. It's George Salas 360, GeorgeSalas 360.com. And I have a way to connect there. I have connection and a link to connect, book a calendar. All my social medias are there. So again, thank you, Jenny. Appreciate you for having me today.
All right. You take care, and we're going to be talking. I want to follow you, of course. And so hang on and I'll.
Absolutely. Okay.